Hello, in this discussion we'll continue on our discussion of Economic Institutions, Chapter 3, and remember that our goals are to define market economy and compare and contrast socialism and capitalism, describe the role of business and households in a market economy, list and discuss the various roles of government, explain why global policy issues differ from national policy issues. All right, so we're moving on to the households here. We've discussed a bit about the markets. We've discussed business, types of business organizations, and we'll move on to the households. So households are groups of individuals living together, making joint decisions. So they're going to be obviously groups of individuals making their own, decisions as to what they want to do, including purchasing things within the economy and services within the economy. Households supply the labor with which businesses produce and government governs. So clearly, the labor that it's going to be used within business as well as within government is going to be provided by households. So that's going to be part of the market, part of the agreement between employer, whether that employer being a government or a business, and individuals. They come into that mutual agreement, once again, both that decision being on their self-interest. Obviously, the employer needing someone to work and hiring someone at a wage that they want, obviously, as much work at the lowest wage, and the employee wants as little work at the highest wage usually, and that's what the negotiation will be between those two individuals. And note that if there is a fair degree of work out there, then both individuals within that agreement have power over that agreement. It's not like one should be dominating. Obviously, if there is a situation where there's a lot less work than there are employees, then the businesses have an advantage in the market. If, on the other hand, there's a lot fewer employees than there are jobs out there, then the employee has the advantage. And once again, it should equal out over time. Would be the idea of the market working in that kind of condition. The largest source of household income is wages and salaries. So clearly, when we talk about individuals, most people are going to make their money through, or their income through wages, through working for somebody, usually those somebody being businesses or government. In the economy, households vote with their dollars to determine what businesses produce. So remember that this idea that businesses, when we think about who's going to produce, what's going to be produced for whom, businesses usually are the ones producing. However, the individuals and the households are really the ones controlling what will be produced because they are the consumers. So in a free market, the consumer is the one that decides what they want to consume, and the producer then, although they are free to produce whatever they want, if they want to be a going concern business, meaning they want to stay in business for a longer period of time, they're pretty much required to produce something that the consumer wants at a price the consumer is willing to pay for it. So note that the consumer really has a lot of power in a free market for that reason. So besides being suppliers of business, households make a significant number of decisions in the economy. So clearly the households are in control of a lot of decisions in the economy. They're in the driver's seat in a lot of different areas. So the roles of government. The government plays two general roles in the economy. One, an actor who collects money in taxes and sends that money on projects such as defense and education. So note that if we think about the federal government, ideally why in the U.S. did the federal government kind of start out? Probably because mainly defense, and that's going to be an area. When we think about the free market, we think that there's some areas where the free market doesn't apply a lot of times. We think about people thinking about their individual self-interest within the country. None of them have within their self-interest really to think about our countries as a whole's relation to other countries. And so that will be a problem, especially in terms of defense. So we all have an interested need in defense, but no one individual in their particular self-interest is the one that will put in. So that's why defense was probably for the federal government one of the first things where we said, yeah, okay, the market doesn't exactly work in terms of that particular item, and it's necessary. Therefore, we need a central government to deal with foreign policy and defense. In order to do that, they're going to have to collect taxes and have the funds and hire people within the government and spend that money in various ways in order to meet that need. So there's a recognition that that need is there. There's also a recognition that now we do have a situation where we have a centralized body making decisions outside of a market condition and making decisions on a fairly large scale type of thing, being the national defense. And there is a question there. Well, we know that when that happens, we're not sure that that type of planning is as efficient as markets, and that's part of our problem. How do we deal with the fact that we need to deal with some things such as defense that are outside the normal scope of markets, and we recognize that a market itself can't really run the defense in and of itself, but how can we still deal with the problems with the fact that markets are efficient in a lot of ways and they're not applicable in this current condition? Therefore, we might want things such as more transparency and more visibility to the public as to what our money is being spent on and this type of thing, since there's no check and balance of the market in these types of things. On the state side, education became a big thing that was desirable, of course, for everybody, and it could be argued whether it should be state or federal but there wasn't. The idea is that we want to have an equal road to advancement for everyone, and in order to do that, we want to have some fairly standardized form of education so that everybody can receive the education and thereby have the means with which to join the economy and contribute to it in the best way as possible. And of course, look after their interests, and so doing, looking at their interests, they look after the interests of the whole. The other way that we see the government is as a referee oftentimes, and it's a good way to explain the role of the government in a lot of ways to determine relations between business and households. And you can also think of the relationships between businesses and businesses. I mean, when you think of a rule, we're going to say everybody's after, you're going to look after your own self-interest, and in so doing, everybody's better off unless they cheat, right? Which means that someone could have gains in such a way that makes people worse off because they're not looking at the rules. What kind of rules might we need in place in order for things to work well? We need some sort of equal amount of information. For example, if someone was to sell something and claim that it does something that it does not do and sell things based on that idea, then that's basically lying or having a lack of information to the public. And so that's one thing we might need to regulate. If we're saying people are consuming things like food and we know that there's some harmful things to it, then there needs to be some people need to know so that they can make rational decisions. So openness in terms of what information is out there. There's also ideas in terms of practices between business. What type of competition is going to be illegal and what is not legal? Obviously, in a competition, one business wants to win, meaning they want to dominate the market. And we've seen this in different areas. We've seen monopolies like Standard Oil was a monopoly of oil and whatnot. And the problem with that is that, well, if there's a monopoly, then there's no competition. That could be seen as a problem with the invisible hand, because the invisible hand is not regulating itself in the case of a monopoly. So if there's some types of businesses that tend towards monopoly, or if there's some type of business practices that are seen to be outside of what's legal, what's in the realm of appropriate business practices, what do we do about that type of monopolistic kind of thing in terms of government regulation? Should we regulate that? Should we break up monopolies, or should we get rid of practices that we think are not in the nature of competition? And so those are things that have been thought about and will continue to be thought about. The United States has a federal government system, which means that we have various levels of government, federal, state, and local, each with its own powers. So we're going to separate our level of authority even within the government between the federal things have their own, this is what the federal government should do, this are the things that the state should do, and the local and whatnot, and they should be somewhat divided. And together, all levels of government consume about 20% of the country's total output and employ about 22 million. So notice that is a huge portion. So that's a huge piece of the economy. So that what the government consumes and what government decisions are to spend on are going to affect greatly the economy as a whole. The state and local levels of government employ over 19 trillion and spend 1.2 trillion a year. And notice that that's when we start talking about trillions, that is a huge, huge number. So when you think about a trillion, we've got 1,000 billions, and 1 billion has 1,000 millions in it. So when you start talking about trillions, it becomes somewhat of a number that the human brain has difficulty grasping. All right, so let's take a look at income of the state and local government. So remember, we're not talking about the federal government here. We're just talking about the state and local. Where do they get their money? So we have property taxes, 21%. Obviously, these are things that can change from state to state because the state is not governed by the federal government, meaning the federal government, theoretically, shouldn't be able to tell the states how to collect their resources. Now, the state is responsible for doing things within the state, spending the money in such a way to cover some expenses in the state. However, how they collect the money is more up to them. So, property taxes, individual and corporate income taxes, sales taxes. This is one where states differ a lot. Some states are going to have more of a sales tax to collect revenue. Some states will have more of an income tax. Some states will have both. And then we have trust revenue, and we have other, and we have the intergovernmental, which probably means mainly that's coming from the federal government. So the federal government to the states, which again, that could vary a lot from state to state, and it could be kind of an issue that is worth thinking about as well, because the more dependent a state is on federal financing, getting their revenue from the Fed, the less sovereign you would think the state would be from the Fed. Government, expenditures of state and local governments. So again, we're not talking about the federal spending, we're talking about the state spending, and much of their money that the state spends is on education. So that's going to be a huge portion. When we talk about state budgets, the education, of course, is a big topic. Income security, health and hospital, we have transportation, public safety, administrative and interest, and environment and housing. And of course, safety, including generally police and law enforcement. Now we're taking a look at the federal government. Where does the federal government get their money? They get the majority of their money from individual income taxes. So 42% of the money that goes to the Fed is coming from us, of course, in the form of federal income taxes. Obviously, the federal government doesn't make and sell anything. All their money's coming, all the government money's coming from the citizen in some way. So then we have the corporate and income taxes are going to be the 13%. We have the excise tax at 10%, and Social Security taxes. That's going to be Medicare and Social Security. Notice that when we think about this one, however, and some of the different areas too, but here we know that this money is going to go into a separate fund for Social Security and Medicare, and therefore it shouldn't go into the general fund, which would be spent on anything, including other stuff like defense and whatnot. All right, so where does the federal government spend their money? Expenditures for the federal government. When we think about the federal government's expenditures, then we have national defense, of course. That's what the federal government was originally designed to do. We've got income security, health, and education. So we've got education, health, Social Security, Medicare, benefit programs, and defense. Note that when we talk about a budget on the federal side, that those are basically the big factors. If anybody's talking about a budget and they're not talking about multiple of one or more of those factors, then they're talking about things that have other 10% and interest 8%, a very small piece of the overall budget. So if they're really talking about how are we going to reduce or change the budget, they would have to touch on these areas to make a significant impact, just looking at the proportions of how the budget is being laid out.